use life insurance as a tool to create wealth and plan for retirement. So that was one of the reasons why I got into the life insurance industry. But my why is my mom. She's very independent right now. Now she was diagnosed with dementia slash Alzheimer's back in 2018. So being that she was diagnosed with that, she never grew up learning about finances and things like that. When she was diagnosed, she was no longer able to get life insurance. And once I found out about life insurance, I didn't know that they had a life insurance rider that's called living benefits, meaning if you have a critical illness, chronic illness, terminal illness, chronic injury, dementia, or Alzheimer's, you're able to access your death benefit and use a portion of your death benefit to pay your medical bills, travel if you want to travel, pay your house note, your car note, send kids to college, because you would either receive it in a lump sum or you receive it as a payment over a course of 50 months. So that was an opportunity that we really missed out on because the state does not pay her full bills. Me and my sister still have to take some of our money each month to pay the difference in which they're not paying, like buying her lotion, buying her tissue, buying her shampoo and things, buying her snacks and fruits and those type of things, buying her diapers because she's in diapers now. So we take our extra income to do those type of things. And at that moment, that became my why, because I want to teach others, like get to others and share this knowledge with others before they go to experience something like that before they have to experience something like that. And also my why I got into credit repair, into the financial space, is because I grew up in a single family household. I grew up in a domestic violence environment where my father, he beat my mom, and I seen him beat my mom from time to time. And she did not have financial wellness. So she didn't understand credit. She didn't understand budgeting. She didn't understand how to get loans and things like that because her credit was messed up. So when we did this, when she did build up enough courage to leave, me and my sister, we moved out on our own. But due to her not understanding financial wellness, understanding how budgeting work, credit cards and things like that, we end up losing the house and had to move in with my grandma. Once we moved in our grandmama, which we was very poor. Sometimes the lights got cut off. Sometimes we didn't have food. Sometimes we had to make sugar bread, where you put a slice of bread in a skillet with butter and put sugar on it, or some of that government cheese that never melts. So we went to those type of things.
It's not the shade. Did you say that never melts? Go to bed. He said it. You put it on now, but it's just cheese. It don't.
Yeah, the cheese that does not melt. But when it rained, I grew up in a shack. When it rained, we put pots in the floors. It was sometimes we had to shut the door off to the where the bathrooms there because we didn't have enough money to heat the other side of the house. After we moved from I moved from the domestic violence environment. When we moved in my grandma, I had a room, but when I looked up, you could see tin flapping. It didn't have sheetrock on the top. So I had slept on the couch for 6 years. I didn't really get my own bedroom until I was like 15 when my mom, she ended up getting her own house. But even though she ended up getting her own house, she did not understand finances. So that's when I was like, you know what, I have to do something because I want to empower other women around the world, because I don't want them to have to experience what my mom experienced. Because I see so many women get into and that's into domestic violence relationships where now their credit is messed up. They can't get loans. They don't understand finances. They don't understand budgeting. And on top of dealing with that domestic violence, now they have to deal with not understanding finances and feeling like they're stuck. So I want to empower them with the tools that for understand finances. So if they find themselves in those type of relationships, they can leave that relationship because now they can go get their own apartment because their credit good. They understand how to use a credit card. They can start over. So that's my why right there. That's what pushes me every day, because even though I'm not staying in Mississippi anymore, the internet is a powerful place, and people that, even though I'm not staying there anymore, I still can reach people from back home that want to change their financial situation, and I can reach other individuals, not only women around the world, but I can also help men, because veterans, they find themselves in similar. A lot of veterans have messed up credit as well, and they end up getting taken advantage of at predatory car dealerships outside of the military base. They find themselves having 18, 19, 20, 25, 27% interest rates on these vehicles. So I want to educate these individuals. So what I'm going to do is today I'm going to share my presentation, and I'm going to explain how, and we're going to go over how to you can use life insurance, because a lot of people think that life insurance is only you're only able to use it when you pass away. Are you able to see my presentation?
Yes, we can.
Okay, do y'all have any questions so far? All right, so what I'm gonna do, I'm gonna go ahead and get into it. I'm going to go into it. Our mission is, well, first off, I'm the owner of E3 Financial Solutions. I have my life insurance license. I have partnered with a company called Insurance Impact. That's who I do everything with the life insurance with. That's my team. That's my family. We have a great culture. We help each other. We help elevate each other, and we help serve the community. And our mission is to empower the uninformed with the rules and tools to win the money game. And our vision is to educate and impact 1 million families by 2028. And what makes us so different is, I don't know if you ever had someone reach out and say, "Hey, can I give you a quick quote?" I always tell individuals, I can't just give you a quick quote. I don't operate that way. I can't give you a quick quote, because how can I quote you on something when I don't fully know your situation? I don't know your budget. I don't know if you manage your money good. I don't know if you're overspending on going to the nightclub. I don't know if you're overspending on popping bottles in the VIP section at the club or not. So what I like to do is we like to
Stop telling my business,
Oh,
Laforenzo.
my bad. My
Stop telling my
bad.
business.
So we like to do a full financial approach where we sit down, we break everything down, see exactly where your money going, and help you make a full informed financial decision when it comes to your life insurance policy. We like to figure out, what are your short-term goals? What are your long-term goals? What are your purpose of this life insurance policy? Do you want to use this policy as protection focused? Do you want to use this policy as a retirement tank? Do you all want to use this life insurance policy to help yourself get out of debt earlier? So what we do is we educate families on how to buy versus teach agents how to sell. So in life, we all have the one thing we all have in life is we all have the money life cycle. In our early years, we need a lot of coverage. Our kids are young, we have high debt, a lot of people have mortgages, we have tax deduction from those mortgages and our kids. But one thing that happened is, we lose our income, we become very devastated, especially if we're the breadwinner of the house, because we no longer have that income available. But as we get older, hopefully we have created more money. Hopefully our kids they're grown now. Hopefully we have low to no debt, our mortgage is paid off, and we have now one thing that we run into, we have no tax deductions. But one of the most serious issues that I'm currently seeing right now is a lot of individuals, they want to retire, but they're scared to retire because they feel like they didn't properly plan to retire, or they feel like they don't have enough money to retire, and they feel like they're going to outlive their retirement money. So, and then the third problem is individuals getting sick. Nowadays, we have kids getting sick, we have adults getting sick, grandparents getting sick, everybody's getting sick, whether it's a critical illness, chronic, terminal illness, dementia, Alzheimer's. We all have experienced somebody, whether it's our friends, our spouse, our kids, our relatives, our peers, someone that we work with. We have probably everyone has probably experienced that in their life, seeing someone get sick or dealing with some type of illness in their life.
So, real quick before you move on. So, what
Go
you're
ahead.
saying is that when you're talking to a prospective client, your goal is to not just give them 250,000 or $1 million, because their budget and how they spend, you want to take into consideration what coverage they do need, but you have to create balance by making sure that their money that they have coming in can sustain that said need. Correct?
Yes.
Oh, I
No,
like that. Okay.
Yes, not only sustain their need, but the purpose of the financial impact analysis is to break down their finances so they can see exactly where they have leaks at. So they can see exactly where they're overspending money at. Can I cut back on some of these Netflix subscriptions? Do I have Netflix, Hulu? Do I have Stars, Paramount? Do you have Disney? Like, there's so many different subscriptions out there, and a lot of people don't realize before, if you add up all your subscriptions that you probably have anywhere between $100 to $200 in subscriptions if you're not really paying attention to your finances. So I like to sit down with them and break everything down, because sometimes a lot of people are overspending in some areas where we don't even have to create a bill for them to get a life insurance policy. We just can move money around, show them where they're spending a lot of extra money at. They dial it back a little bit and they can use that money to pay for their life insurance policy.
Got it. I love that. Because
Mhm.
again, I feel like we think about that in the credit space. So having the ability to think about that even in life insurance, I feel like that's bridging a gap even on a whole new level. So I love it.
Yes. So, have you guys ever heard of life insurance you do not have to die to use?
Not until I met you.
Yes,
So,
I have. I got that. I have it with Prime America. Matter of fact, I just had to renew mine. But I have that with Prime America.
okay, you have living benefits?
Correct. That I can borrow from. So I got it in 2020 when COVID hit because everybody was dying around me. So I got it for me and my kids in 2020. So this year makes the fourth year. This year I can pull from it. So I haven't tried to yet, but I'm excited. I can't wait.
Okay, awesome, 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 awesome. So, another question. Have you ever heard of OPM?
OPM. When I was in the government, I did.
Okay, so as a business owner, when most people hear of OPM, they think of other people's money,
That's what I was finna say.
credit cards, bank loans, and things like that, other people's money. Where in the life insurance space, in the living benefit strategy, it's our OPM cycle as well: optimization, protection, and management. What we do is we help our clients optimize and grow their money risk-free, tax-free to plan for retirement. We help our clients get protection, whether if they get a critical, chronic, terminal illness, dementia, or Alzheimer's, they are able to access their death benefit, where they are able to use that to pay on their medical bills, help their kids out, pay for college, buy cars, pay for their house notes, and things like that. And management. We help clients set up strategies to eliminate debt and create opportunities. Why they build wealth? Because one of the reasons why a lot of people lose their home is because they experience someone in they either they get sick or someone in their household gets sick where they have to they have to take off work. Now they're not bringing in income, and now they're not able to pay their mortgage and the other bills. And now they find it with them have to be in off work so long to care for their loved one. They find themselves getting behind on bills. So that's where the living benefit come in, because now you're able to use your life insurance death benefit to pay your medical bills and things like that. So in the OPM cycle, we have a triangle right here. Um, the way the triangle works is the building blocks of wealth. The way the triangle wealth, you're supposed to build foundation. You're supposed to start at the bottom and then work your way up. And what at the bottom we have management, meaning cash flow insurance. Do you have emergency funds? Do you have emergency funds? Do you have debt management? Do you have equity management in your home? Then you have the middle of the triangle, which is protection focus, which is a income replacement, long-term care riders, disability income, living benefits. And then at the top of the triangle, we have optimization, retirement tax strategies, wealth transfer, maximizing profit, minimizing taxes and risk. But what happened is, with a lot of individuals, what happened is when they start at the top of the triangle and they don't have the middle of the triangle covered and they don't have the bottom of the triangle covered. So we get our job, we get our brand new job, and when we as soon as we start our job, the first thing we do is we sign up for 401k. So a lot of people have the retirement for us. They started planning for their retirement 401k, but they don't have the protection and they don't have the management. But what happened is, as soon as a family member or their spouse, the loved one gets sick, Now that you're not working, people start taking out loans from their 401ks, withdrawing from their 401ks, withdrawing from their retirement, and before they know it, they have dissolved their retirement account, and they don't have any retirement. They don't have any protection, and then they don't have any management. So what we do is when the client come in, we sit them down, we do a financial impact analysis with them, and we do a full scope, and we can help them create a strategy for each one of these building blocks right here, for using life insurance to plan for retirement, protection focus, making sure they're protected in case something happened to them, making sure they can qualify for living benefits, management, helping them if they have a lot of debt, showing them how they can use the infinite banking strategy to take out loans against their life insurance policy to get out of debt, to completely get out of debt, including pay off their mortgage within 10 to 12 years. So when it comes to life insurance, we offer a 4-in-1 solution. We help clients get life insurance, so if something happened to them, that they can their family members get death benefit, whoever they tax-free death benefit, whoever they leave the money to. We help our clients set up retirement income, money for a secure retirement, and the majority of our strategies are using the indexing strategy. And what I mean by the indexing strategy is, if you see this my cursor right here in this line, this diagram right here, the indexing strategy is if you're using like a IUL index universal life insurance policy, or you would never lose money. Your investment, you'll never lose money to the market. Meaning when the market goes up, you get the gains. When the market goes down, you have a 0% protection flow right here. So when the market crashes, when the market goes up, this is your new floor. So when the market crashes, your floor is 0, it stops right here. So when the market crashes, you don't lose any money. So when the market goes back up, once it reaches your floor again and go up even more, you start to gain more profit. And anytime the market go down, you never lose any money in your indexing strategy. So we depending on what strategy a person want to use, a lot of people don't know that you can create a life insurance solution to create your own private pension that will pay you from the year that you retire until you pass away. You get a yearly tax-free income. And the next thing, we have these two right here on the left-hand side. These are free. The only thing you have to do is qualify for it. When you fill out a life insurance application, it goes through underwriting. If everything come back good, you're able to include their living benefit riders for free, meaning just after being in one of our policies for just 30 days, say you got a $500,000 life insurance policy. You've been had your policy for 30 days. On day 31, if you went out and had a car accident and you had to have surgery and you was not able to work for 6 months, you would reach out to me and say, hey man, I need to look into my living benefits. What we would do is we would reach out to the carrier, explain your situation, get all the documentations up, and what would happen is you would be able to access your death benefit. Meaning if you that $500,000 death benefit, depending on how seriously injured you is, you will be able to access that. They would put a lump sum into your checking account, or you will receive monthly payments up to 50 months. And the living benefit riders are chronic illness, critical injury, terminal illness, dementia, and Alzheimer's. As I mentioned earlier, right here, just 30 days after being on 1 hour policies, if you get access to the living benefit riders, you have access up to $1.5 million at no additional premium. Let me explain that. What I mean by access up to $1.5 million, that means if you had a $1.5 million life insurance policy, if you got injured or critical illness, chronic illness, terminal illness, dementia, Alzheimer's, you would have access up to that $1.5 million. If you'll be able to access it and use it while you're alive. And you'll be able to use it for pay your medical bills. You'll be able to use it to pay for your kids' college, buy your car, pay your house note, your car note, whatever you want to do with that money. Once they deposit it into your account, it's yours to do whatever you want to do with it. The only thing about that is, say for instance, you had a $500,000 life insurance policy and you had an accident and they gave you a $250,000 lump sum into your checking account. What they would do then is just subtract that from your death benefit. Now your death benefit is $250,000 rather than the 500 because they put the lump sum of 250 into your checking account. Do that make sense? I, your volume is low.
Yes.
Awesome, awesome,
Yes,
awesome.
yeah, yes, I understand, but I have a question though. So if
Go
a
ahead.
client does that, let's say they take the money out, because I've had someone ask me this question where they take that money out to like pay for a house. Can they put that same money? So let's say they bought $100,000 house and then they took what would have been a mortgage and said, I'm going to set aside $800 a month. And then they get the $100,000. Can they put it back into the life insurance to bring it back up? Or is it once it's done, it's done?
So are you referring to like the living benefits, or are you referring to like a life insurance policy where
Oh,
they've
that's a
had it
great
so long
question.
where they build cash value?
That's a great question. Either both. Let's go both.
Okay, so when you when they put the lump sum in from the living benefits, that's your money right there. You don't have to pay that back because you have a $500,000. For instance, if you had a five hundred
Got
thousand
it.
dollar life insurance policy, they would just subtract it from that death benefit over there. So you can save it,
Okay.
you can invest it to other stuff to make money, or you can pay your medical bills because we all one thing we know, medical bills add up very quickly. And
Yeah.
the other part of your question, if they say, for instance, you had a cash value life insurance policy that had $100,000 in cash value, if
Uh-huh.
you was like, hey, you have two options. You can take that cash, that $100,000, 100K out as a loan, or you can take it out as a withdrawal.
Oh,
So
okay.
if you take it out as a withdrawal, you don't even have to pay that money back
Back.
if
It's
you don't want
yours.
to, because
Got
it's
it.
yours. What's going to happen though, if you pass away, that 100,000 that you took out as a withdrawal, they just going to subtract it from your death benefit.
Got it. Roger that. Thank
So
you.
you're welcome. Now, if you take it out as a loan, so if you take this hundred
Then I
thousand
can pay
dollars
that
out,
back.
you take $100,000 out as a loan, you pay that money back. But the thing about it, say for instance, you have $150,000 in cash value in your life insurance policy. You say, okay, I want to take out $100,000 loan. You take that $100,000 loan out of your policy. Your life insurance cash value is still earning compound interest at $150,000 because you took that. You still earning a compound interest at 150,000, even though you took out 100,000, because you took it out as a loan rather than withdrawal. So it's still earning compound interest, and then you're gonna pay that loan back at like a 4.5 to 5% interest rate. So that's why they said that's where you always hear people say using life insurance to become your own bank rather than going to the actual bank. That's
Bank
what
to
they
get it.
mean. Yes.
Got it. Got it. Okay. Thank you so much.
Are you welcome? So this is what I mean when I tell everyone that we have to do a financial impact analysis. If you see this tablet right here, you see all these numbers right here. What we do is we do a full financial scope. We sit down with the client and we go to all of their finances. How much money you bringing in? How much money you paying in each bill a month? How much money you how much money you have left over in surplus each month? Because, and I always tell individuals, let's be very honest, because the goal right now, you might not be in the best financial situation, but if we do this right, we can set you up for life and put you in a better financial situation for later on when you get ready to retire. So once we put these numbers in, we like, if you're renting, we want to know how much you're paying in rent, HOA dues, how much are you eating out a month, how much you paying in grocery shopping, pet care, personal care, petty, manis, haircut, hair fix, entertainment. Are you going to the club every weekend? Sitting in VIP session? Are you popping bottles? You drinking Ciroc? You drinking your Stella Rose wine? We like to know all of that, because what we can do is we put it into the system. If you taking a trip, if you know you take 2 trips a year, every year, you know those 2 trips cost $10,000. What we do is we divide that 10,000 by 12 and put that as a monthly expense. So we add it all in. And what happened is, once we put all the numbers in, it's going to give us a diagram right here. It's going to tell us exactly how much money you make a month, how much money you spending in bills. It's going to tell us how much money you have left over. Right here, it's going to break down all of your debt, from student loans, car loans, credit cards, and things like that, mortgage. And then all the way to the right, based on how much money you have, I mean, based on how much your monthly bills are, it's gonna tell us exactly how much emergency funds you need. So if your all of your bills monthly are $10,000, the golden rule is you should at least have 3 months of savings up. So that way, in case you get fired from your job, you quit your job, you get laid off, furlough, family member gets sick, at least you have enough for 3 months of bills saved up so you're not just stressing right off the bat. Yes, you're supposed to have 3 months of income saved up. Based on those numbers, it's going to tell us your current estate, how much your current estate is, and then the numbers that we put into this the system, it's going to tell us exactly how much life insurance you need based on your lifestyle. 5 years, 7 years, 10 years, how much life insurance you need, and so on, 20 years of lifetime. Then up here, what we do is we like to know what age you want to retire. Then, based on what age you want to retire, how much money do you want to have on a monthly base? Well, then once you tell us how much money you want to have on a monthly base, what we do is a reverse engineering. We see how much you're going to have already, and then we need to fill in the gaps. We go behind the scenery. We create solutions depending on which solution you want to do. If you want to plan for retirement, or you want to be more protection focused, or do you want to be more management? Do you need to get out of debt, or you want to pay off your debt within 10 to 12 years using your life insurance policy? We create solutions to do that. And then we ask you, what are your personal goals, your short-term goals, your long-term goals? What are your goals? Let's work toward those. And then that's what we do. And then we set up a second appointment to come back and break down all the solutions for you and to help you reach your goals. You have any questions? It's your volume. I can't hear you.
Sorry, do you have the link if anyone wants to fill out that form to connect with you? I know you're going to probably drop it later, but do you have the link that you can drop in the chat so that they can have access to it? And yes. I can also copy it to put it in.
What I'm going to do is I'm going to put yes, I will put the link in. Give me 1 second.
You're amazing. I'm sorry. I want you to do extra work. Yep, sure do.
Oh, you good. You're good. You're good.
And so with somebody have not balance, somebody who had a budget of minimum, what can you offer?
Give me one. I'm gonna answer that question. Give me 1 second. Let me find this link for her right quick. I'm gonna answer your question. Okay, got it.
And then what's the difference between you guys and Prime America?
Did you get the link? So, do you mind repeating your question?
The second question was, what's the difference between you guys and Prime America?
Okay, I'm gonna answer that one. What was the first question about a budget?
Yeah, what would be the best plan for somebody who have a minimum budget?
What we would do is we would do the same process, and then what we would do is sit down, we get your age and everything, get your budget. We'll go through your financial impact analysis to see where you what extra income that you have a month, to see what your budget is, and then what we do is go behind the scenery and create a customized quote for you to reach your goal. Depending on if you want to get protection for us, make sure you have living benefits, or see if you want to plan for retirement, or do you want to plan use life insurance to get out of debt? So based on which category, we will create a customized solution for you. We'll create a customized solution for you to help you reach your goals. And what was the second question?
The second question was, what's the difference between you guys and Prime America?
I don't know a lot about Prime America, but what makes me different is I experienced not having life insurance, a situation with, like I said, with my mom not having life insurance. I grew up not having money, not understanding life insurance. So now that by me going through what I went through growing up and seeing where I'm at now and what I've learned. And if I could go back, I would definitely change it and get life insurance as a younger age. What I can say, what I'm doing for my son at the age of 13, I add him as an authorized user to my credit card. So when I add him as an authorized user to my credit card, that helped start building his credit. Once he turned 18, soon as he turned 18, he had a credit score of 768. What I did after that was he's a Navy Federal member. So what I did after that, I went and got him a pledge loan. So by adding him as an authorized user, it took care of the revolving side of his credit. By me getting a pledge loan, it took care of the installment side of his credit. So now I've built out his credit. The next thing I did for my son is I'm teaching him about budgeting. I have a 30-day debt freedom budget course. So I'm teaching him about budgeting. And then on top of that, he have his own IUL life insurance policy, a cash value life insurance policy, debt earned cash. He have living benefits. So if he ever gets sick, an accident or something, where he ever gets sick where I have to take off work, we're going to be able to use his living benefits where I can take care to pay our bills while we can't work. We can use to pay his medical bills and things like that. On top of that, what I'm doing for my son is now that he's graduated, he's in college. Soon as he graduated college at the age of 19, what I'm going to do is I'm going to help him set up another life insurance policy, that's going to earn cash value, and we're going to use it to set up his own private pension. He's going to tell me at what age that he want to retire, and then I'm going to set it up so once he retire, he get a yearly tax-free income. And on top of that, what I'm about to do for my son, I'm going to get another life insurance policy on him that earn cash accumulation, so I can use that cash for investments and things like that. So that's what makes me different from other life insurance agents, because I come from poverty, I come from being poor, and I know where I used to be, and I'm proud of where I'm at now and the knowledge that I've learned. Now I can take that knowledge, now that I'm not serving my country and I'm out here serving my community, and out here creating women empowerment, helping women reach their goals, making sure they have the financial tools. If they go through the same type of situation that my mom went through, a domestic violence situation, I'm equipping them with the tools so they can get out of those type of situations. So I've always, for as Prime America, what I've always heard, they say buy term, invest the difference. But the thing, so I don't really know a lot about them. I just know about when they said buy term, invest the difference. What normally happens is when people don't invest the difference. So they have the term life insurance, but I've never seen a lot of people that invest in difference, until they Roth and things like that. So that is just my story and what makes me different from other life insurance agents. I'm just out here to serve the community. My goal is I'm never trying to sell anyone. My goal is to educate, because I know even though if you don't buy anything from me, I know if I properly educate if someone says something about life insurance, you're going to refer me out, because one, I never tried to sell it to you. And two, I was just here for educational purpose only, to help you, educate you. So when you have a friend, a family member, or kids, you can teach them and show them the ropes of how to create generational wealth for as they get older. Because a lot of people don't know, with life insurance, you can get a life insurance policy on a 15-day-old baby. The younger you get life insurance on your kids, the better it are, because the policies, they're young, they're healthy, and the policies are cheaper. So the policies are very cheaper. So now you're able to get a lower monthly premium, and then you can set them up for success, where you can set them up so they have a cash value life insurance policy. By the time they're 18, depending on what type of policy you have, they have enough cash value to pay a down payment on a house. Or if you want to go to investor side, they have enough down payment to pay enough money cash value to pay a down payment on a triplex, where they move into one triplex and then they rent the other two out, and the two renters that's renting the triplex out, they repay your son or daughter, they pay their rent each month, and now they're saving their money. In 2 to 3 years, they have enough equity in that triplex where they're able to take out a HELOC loan to buy more investment products. These are just things I'm doing with my son. So do that answer your question?
Yes, it does.
I love that.
So, and With the credit, the reason I've always wanted to have how it can relate to credit repair. I've always wanted to have a full financial firm. So now that I do credit repair, I offer budget solution. I brought in the life insurance part. So now I have a full service financial service company. When a customer come into my credit repair program, the first thing we need to do, we need to make sure they have the right mindset, because so many times in credit repair, we fix clients' credit and they get their houses, they get their cars. 10 to 12 months later, they're back in the 500 credit scores because they didn't have the right mindset to understand. They didn't understand the financial literacy. They didn't understand the budgeting. They didn't take the financial education seriously. They're not reading the emails, the credit education emails that you send them. So they're not really fully understanding. So now they find themselves back in similar situations. So my goal is to make sure they understand the budgeting. Now that they understand budgeting, I can help them get their house, get their scores up. I can show them how to add their kids as authorized users. I can show them how to, when their kids get 18, go down to have them create their kids a bank account while they're the age of 13, 14. The reason for that is so they can build this relationship with this bank and this credit union, because once they get 18, they're going to have a good credit score from being an authorized user, but they might get denied on their loan. But if they already have a relationship with this bank for 3-4 years, what you can do is they see that your son, your daughter are depositing money into their bank account every week, every month. They see they not late on their payments and things like that. So now they will probably get them a $500 loan, put that $500 loan in their savings account and take that each month. You make their monthly payments on that. So now you build all three of their credit bureau scores. And now that you've building them a strong profile, so when they do get ready to go buy that triplex or that house or get a bigger loan from the bank, they have enough credibility with the bank. So those are things that I like to do in my company: teach them about budgeting, teach them about credit repair. Then, because I always ask them, what are your short-term and long-term goals? Now we've done credit repair. You got the business credit cards. You got the loans. What are you doing for retirement? Do you have young kids? Do you not know that your young 5 and 6-year-olds are your goal man? You might be 40, 50 years old. Yes, your premium might be a little higher, but if you would also, you get you a life insurance policy that fits your budget, but if you put life insurance on your kids and as a max accumulation life insurance policy, IUL is earning cash value. So now if you 40 and you got 2 kids that you put 2 cash IUL policies on, once they turn 20, 25, now you 60 in retirement age, this is another retirement tank for you. So I like to look at the whole scope. So that's why I added the life insurance side, because I can do life insurance, I can do retirement. So that's why I added all of this to my credit repair business. And the thing about it, I partner with credit repair companies. They get their life insurance license, and they become life insurance referral agent. What I mean by a life insurance referral agent, because the only way you can get paid as a life insurance agent, you have to have your license. So they like, hey, man, I like what you said. I really want to add that to my business, but I don't want to do life insurance. Okay, that's totally fine. Here's what we can do. Go get your life insurance license. Anytime that you go get your life insurance license, anytime that you have a client, what we do, you refer them over. Once that client get approved, if the commission was $1,000 commission, you get 15% of that commission, and all you're doing is getting paid to refer people over. Now rather than just taking care of their credit, getting their loans, now you're taking care of all of their needs, retirement needs, you're taking care of their life insurance needs, you got them on credit, you got them on budget, and you just open up a lot of doors for them. And you open up a lot of doors, and you also create another stream of income. And another thing you're doing, you also serving your community even more on top of just serving with the credit repair side.
You're getting tons of fire emojis in the chat.
Oh,
so you are dropping it like it's hot right now. Just wanted to cover, let you know, I love it. Thank you so much for the knowledge.
Oh, you're welcome. Do you guys have any this actually the end of my presentation? This is the presentation we do when we talk to clients. This is the same presentation we do with individuals. Say, hey, I want to be a life insurance agent. I want to get my life insurance license, be a referral partner, or I want to be a life insurance agent to add it to our add it to my book of business. If you have any questions, please feel free to use the link or reach out to me. I'll be more than happy to ask any question that you have. Another thing we do is we do free policy reviews. So if you currently have a life insurance policy, we can pull them. I can create a solution for you, and we can put those side by side and see which policy works best for your goals, your short-term goals, your long-term goals. Because a lot of people, a lot of people are like me when I first got life insurance like 8-9 years ago. I just got it because I wanted to be different. I wanted to make sure that my son was good. I wanted to make sure if something happened to me that my family was covered, because I didn't even fully know about life insurance until like a couple of years ago. That's when I really started studying it. So if you currently have a life insurance policy, you can reach out and we can do a policy review. I can create a solution. We see what short-term goals you have, what long-term goals you have, and create a roadmap to help you reach your goals, whether it's retirement, get protection, getting out of debt. But one thing a lot of people don't know, 98% of people that currently have active life insurance policies, they do not have the living benefit rider. They only have the death benefit rider. Yes, they might have cash value, but they don't have they don't have the living benefit rider. So 98% of people that currently around the world have active life insurance policies, they do not have the living benefit rider. So if you see this video, please look over your life insurance policy to make sure you have the living benefit rider. And it's free to upgrade. As I mentioned, we do side-by-side comparison, and whatever you spend for that policy, what we can create your solution to meet your budget and meet your needs. At the end of the day, life insurance, we could do customized life insurance policy to meet your budget. Another thing, a lot of people don't know that term life insurance policies have living benefits as well. It's okay to have to it's okay if your budgeting is tight. It's okay to start with a term life insurance policy. Let's get something and then work your way up to the IULs, the whole life policies, and those things like that, if that's your goal.
I have a question. So what you're telling
Okay.
me is, hold on,
Okay.
let me switch this to standard. Hold on. I want to switch the viewing a little bit so we can have some dialogue here. Okay. So my question that I have is, what's the benefit? Okay, so I know you're saying if you don't really have the capital, you can have term. So you're saying term has living benefits as well
Yes, they do. It depends on the company. It depends on
on the
what
company.
because I
Okay.
know the company that we use, they do have living benefits. And I know you're in Texas, they're actually right up the street in Addison, Texas.
Really?
They've been open 100 and some years. And what a lot of people don't realize about life
So
insurance.
wait, can you break down for the people that might not know the difference? What's the difference between term and whole? How if you have a term, can you switch it into a whole? You know, I like to ask these
I got you.
difficult questions.
Yes.
So break that down. So for the people in the back of the church that may not know what's going on.
So the difference between term and an index universal life and whole life insurance policy, a term life is like a rental car. You rent it. So you're either going to rent it for 10 years, 15 years, 20 years, 30 years, depending on your age. But when that term is up, that means now that $100 you have $500,000 term life insurance policy, you're paying $100 a month. When that 15 years up, that 15-year term is up, your premium is going to jump a lot. You might go anywhere from paying $100 a month to $1,500 a month. Your premium is going to jump. So that's why I always tell people, if you can get a index universal life or IUL index universal life or a whole life, get that, because now you own that policy for the rest of your life. And the thing about an index universal life, IUL, and a whole life, you can set it up to, okay, I only want to pay for this policy for this amount of years. If you're 20, I only want to pay for this policy until I get 44 or 45. I only want to pay for this policy until I get retirement. I'm going to retire. I know I'm going to retire at 62. So I only want to pay for this policy until I get 62. I don't want to pay for no more life insurance after the age of 62. You can set it up that way. IUL, it's you own a policy for life. It's you get the upside gains and the downside protection. With an IUL life insurance policy, you never lose money to the stock market. So it have that 0% protection floor.
Sorry, I got more questions.
Okay.
I got more questions. Follow-up question that I have is when we're looking in to like IULs, because I'm going to be honest with you, IULs right now, I'm hearing it, I'm seeing it all on Instagram. Like I literally was on Instagram earlier today, right when I was tagging you in, and I was like, oh my goodness, this is going to be so cool. But I don't like, is it a situation where it's a hot button topic? Is an IUL something that someone could get if they have lower funds? Like truly, like if the person says, listen, I can only afford $25 a month, is an IUL ideal? Or would that person be someone that you would say, okay, we can't do IUL for you. Let's do a term. And with doing that, how would they get benefit from it, like on the back end, if they decide that, okay, I can't do an IUL because of the money, let me do a term? Can they roll the term into an IUL?
Yes, so depends. It depends on the carrier that the carrier that we use. Our term life insurance policy are able to be rolled into an IUL within a certain amount of years. They on the policy on the illustration, they're going to show you the amount of years that you have. I think it's 12. I think it's 12 years. You have 12 years to roll it into an IUL. But I don't have an illustration in front of me. But it does have the ones that we use, the term, it does have living benefit routers, and you're able to roll it, convert it into a IUL. And the reason why I always tell people, even if you can't get an IUL, get a term life insurance policy with living benefits. And if that term life insurance policy can be rolled into a IUL policy, whatever the underwriter, whatever issues that you had or medical situation that you have, you was perfectly healthy and you got a 10-year term life insurance policy. When that 10-year term life insurance policy expire and you get ready to convert it to a IUL, it does not have to go back through underwriting. They just basically go off the information that you did when you first did your application. But you do have some term life insurance policy that does not convert into IULs.
Okay. So follow-up question I was going to ask is, when we are looking at term, whole, IUL, if a person is coming to you and they're like, I have life insurance at my employer. A lot of us, I don't know about everybody else, but I'm a 9-to-5 coach right now. Okay. Your girl finna leave corporate America, but until she does, they are my investor. Okay. So for a person who does have a 9-to-5 and say, well, my job has this, what is the benefit of me double dipping? Because, you know, like for me, I have like 3 policies at my job. I'm covered, my husband's covered, my children are covered. And then now I have outside benefits, right? That are also covered. But if a person is saying, well, my job already offers it to me, what dialogue would you give to them to say, okay, listen, I know you have that, but this is going to also be edifying for you. What does that conversation look like?
The answer, let's go back to your first question that you had previously about if someone have a budget, are they able to get an IUL? Yes, like the policies are customizable. So whatever your budget is, it's safe for instance, you're like, hey, I only have $100 budget right now. What can we work? Can we create an IUL? Yes, we can create this. We can go into the back office and create a solution to meet your budget where you of how much you want to customize that policy for. For as group life insurance is one of the easiest life insurance you get, because once you start working for a company, only thing you have to do is fill out the paperwork. But when you leave those jobs, you get fired, you leave. A lot of those jobs do not let you leave with that life insurance. So for instance, if you have life insurance through your company, I always recommend people to do their research and get their own individual policy, because what a lot of people don't realize, a lot of the group life insurance at your job is on the accidental insurance. What if you pass away and it's not an accident?
So you telling me that if I'm minding my business and the Lord sees fit to take me home, my benefits ain't gonna cover because it is not an accident?
Not all jobs, some
but
jobs.
some of them.
I
Really?
always tell people
But
to
your job
read
get paid for it though. Your job get paid for. I work in HR, so we
The
will get paid.
devil, Trina.
Yeah, the job will get paid for it. So yeah, they'll get the benefit for sure.
What?
So I
They lost
always,
an employee. They lost an employee. So you will have
yes,
that.
If you don't get off the phone, the Trina said they lost
no.
an employee. Like that, they
So I
lost.
always, and I always tell people, even though you have group life insurance, it's great to have it, but you want to read the fine. You always want to read the fine. It's like going to the car dealership. You always want to read everything on that car dealership agreement. You all with job, you always want to read all the information concerning your life insurance, your disability insurance, and things like that. I would give you a situation. My brother-in-law, he had an accident and stuff, and he's in Mississippi, and he's been trying to get his disability going for the last 4 years. When he first got injured, he was getting short-term. He was getting his short-term disability. A lot of people don't realize short-term disability sometimes only pay you up to 60% of your salary. So if you was making $1,000 a week, you living check to check already, you get injured, how are you going to survive on 60% of your income? And then another one, when the long term kick in, now that 600 a week, now you're going long term, you might only be getting like $1,000 a month, and now you have to wait till your state approve your disability and stuff like that. So I always tell individuals, make sure you cover, if do your homework and make sure you cover yourself first. So to answer your question, it's good to have insurance through your job, but you also want to make sure you cover your family and cover yourself first. I mean, first, because what you don't want to happen is you're a two-family household and you doing okay, but you know if something happened to you or something happened to your spouse and you have kids and now that income is gone. Now that spouse on top of
I'm gonna have a
grieving,
whole heart attack.
yeah,
So I'm gonna
on
be
top of
gone with a
grieving,
husband, and I ain't gonna have no life insurance. Somebody gonna pay me. Okay, I'm gonna
now
go up
you
to the job.
and now you're trying to pay your house note, you're trying to take care of your kids, you're trying to grieve and things like that. So I always tell people to read the small print. If that's the only way you go, but I always recommend them getting their own life insurance policy. Because you
Okay.
just life happen and you just never know. And another thing, for instance, if you're a single parent, I always tell people, a lot of people like, I don't need life insurance. What if you're a single parent and you have 3 kids? And you pass away, and now your guardian have to take care of your kids, and you don't have any life insurance, and this guardian was already struggling trying to pay their bills and everything. Now they have 3 more mouths to feed, 3 more people to buy clothes for, shoes, school supplies, medical bills, grocery, and we all know groceries are high and these kids love to eat. So that's why
All the time.
I always tell people, if you can only afford a little amount of life insurance, get something. But then if you can't, try to get life insurance first. But if you can't get approved for life insurance due to health risks and things like that, then go find you some living benefits. I mean, not living benefit, correction. Go find you some burial insurance or some final expense insurance. But at least try to get life insurance first.
Okay. I think that's amazing because I didn't even think about that. And Trina, thank you for dropping that tip. So a lot of people are getting life insurance at the job thinking that's going to encompass everything, not knowing that, hey guys, that may not cover you in totality and you're still leaving yourself exposed. And we want to make sure that you're educated on that. So
And
any other questions, guys? I know that you
I
go
got
ahead.
something for you.
Go ahead.
Even in another thing, say for instance, you 30 years old, you start working at this company, you have life insurance. You like, I don't need individual life insurance because I work at this company, I'm good to go. But now you've been working at this company 15 years, you're 45 years old, and something happened and you can't take that group, some are convertible, if yours not convertible, now you can't take that life insurance converted over to your individual life insurance. So now when you could have got quoted as a 30-year-old when you first started working, now you get quoted as a
As a
45
40.
year old or a 50-year-old or a 60-year-old. So the younger, it's good to get life insurance, but the younger you start out to get
The
life
better it
insurance, the
is.
better, because you're a lot healthier. You don't have the high blood pressure. The kids don't have diabetes and things like that. But the older you get, things start breaking, things start hurting. And it's you still can get it, but sometimes it make it a lot, you know what I'm saying? I wouldn't say
More
difficult,
difficult.
a
It
lot
was a
more,
little.
a lot more questions.
A lot more hoops to jump through. Because
Yeah.
I remember I had a friend of mine who I was talking to for years. And it's so weird because we always give good advice and we don't take it for ourselves. Don't judge me, y'all. But I had a friend who I remember she came to me and she had told me that she was feeling sick. And I was like, hey, you got life insurance? Because you got kids, you got children, you got a whole bunch of them. And one of her children has sickle cell, like full sickle cell anemia, like he's in the hospital with transfusion. And she kept saying to me, I can't get life insurance because they won't accept my son. And I'm like, what does that have? Life insurance is for you. And that's when I learned that sometimes we're not, just like with credit, right? We are not educated to the totality when it comes to how insurance works. Because she ended up passing away. And guess what? She didn't have any burial fund. She did nothing. Right. And now she's not here. And now her children, who happen to be in their 20s and, getting out of 18, are having to figure out, like, how are we going to live and survive without mom and take care of our brother? And let me be clear, the survivor benefits, I remember when my mom passed away, I want to say the survivor benefits that they gave for 2 children was like maybe $800. And I'm saying maybe $800. So a lot of people are thinking that the government or some entity is going to help. And my girlfriend, like I said, she just passed away maybe like 3-4 years ago. Her survivor benefits for her children was only $600.
Oh, wow.
When you think about how much money you have coming in, to Laforenzo's point, when he was talking about his mom being in the hospital and being on dementia, right? And having to deal with that experience, like, the government, love them, not trying to hate on anybody, but there's not enough that you can put in with them to get what it is you need. And with the life insurance, with you having the it's UIL, right? Because I always say IUL.
IUL.
It's an IUL. Oh,
Yeah.
I had it right. Look at God. Having those options, like, I literally talk to my oldest son. He don't listen. He don't listen until it's too late, right? So I talked to my middle son and I was like, listen, don't follow your brother, because by the time he pulls up, he's gonna see that I'm telling you what to do and how to, like, maneuver. And I said to my oldest son, like, you could take $100. You don't even have to do it every paycheck. Just one paycheck a month. Put $100 in the IUL. And I'm telling you, by the time that you're 30, the way that you're working and what you're doing, it's not going to be the same. Like, bro, you're going to have so much. And he's like, well, why didn't you do it? I said, because there's no one to teach me.
I did it. I'm doing it with my son and my nephew. I'm doing it with my son and my nephew. You remember I showed you
Yeah.
I
I
showed
literally,
you.
like I told him this, I said, unfortunately, come 2024, whether you want to or not, I'm pulling the money and we're going to sign. He was like, you just going to bully me? I sure am. I said,
He would
because if
appreciate
you
it.
pass away tomorrow, I have to fund that bill. Right? Like, and I think a lot of times people don't understand that death is a real thing. Like, you don't know when it's coming, when it's pulling up to your block.
Yes.
So what are you going to do if something passes away? And, he always says, well, you already said you're going to cremate me. Right. But I could cremate you and have millions. Or I could cremate you and have $2.
On top of the cash value, when he's in his early 20s, that $100, if he had a budget of $100 a month, and he put it into the IUL, it's earning cash value. So now by the time how old is he?
He's just turned 20.
So now by the time
Carlo just turned 20 or 19. I think it's 20.
Yeah, so now by the time you have all this 30, 35, you have this cash value, you can do what you want to do. Buy a car, you can use it, buy, like I was saying, you buy a house, investments, whatever you want to do with that cash value, because this your cash.
Yeah, and I mean, I'm having a conversation. So I kind of told my oldest son, I was like, I'm not gonna be signing off. And I know everyone gonna have their judgment. I don't care. Y'all can watch this on the replay and judge yourself. I told my son, he just turned 18 and he's getting a job. And I said to him, I'm not going to help you get to work. I'm not going to help you I'm not going to do anything unless you promise me that we're gonna sit down, we're gonna have a conversation with Laforenzo. Okay. And we are going to make sure that you have this IUL established. And he was like, Mom, you're making it such a serious thing. And I'm going to tell y'all, my mom passed away from cancer. My grandma at 45. My grandmother passed away of cancer at 55. I have 2 great aunts that passed away in their 30s. So to sit here when people are looking, you're thinking you're going to be here forever. That dash could be really long or it could be really short. And for me, I thought about it differently. I don't know if you ever saw this, but I was watching Candy Buress Tucker, and she stated that she learned about life insurance from a group of white older women who was talking about it. And it was a friend group, and each of them put the other one on as a beneficiary. And what they also did was, I believe they had like living benefits or something like that. They were able to draw cash out of it. They went ahead and purchased different properties when everyone's value got to a certain point. And then when they passed away, they all split the money and they did what, you know what I'm saying, what they had planned to do. So it wasn't, they were building wealth within the cluster of the 5 or 6 of them. And I'm like, wow, like, who taught them that, and why didn't they teach that to us? And now I want to teach that to everyone that's in our community, to understand how, if you're single and you don't have a family, you got friends, and that friends are your family. How are you guys building a legacy to make sure that you have something left when you're gone, right? And we wait too long to make that decision. So I love the fact that you break it down. Like, I personally have had a consultation with you. I love how you break everything down. I love how you go through the finances. I love how you have the conversation, like how much, and the realest conversation, or the realest question that I felt that you asked for me is not just like, how much do we make, or how much, what our things are.
Mm-hmm.
Having the understanding of how much my husband is worth to me living, and watching a friend of mine's husband pass away last year, and watching him see that alive, his husband was worth I think it was like $8.3 million.
Oh, wow.
And his life insurance was a little over $3 million. And everyone is able to, like, his mom was still alive, his kids, everyone's able to live. Like, you know what I'm saying? Like, live good. It's like, I think that we miss that option of how are we taking care of our family when we're not able to still take care of our family, right? And you brought that home when we had that conversation. So that's why I was like, I had to get you into the group to talk to everyone, so they had an option to talk to someone who can look at the numbers, look at what their goals are, and really give them a product that is going to be beneficial for them and their family.
Yes, and one thing a lot of people don't realize, banks have the most life insurance. So I tell people, how do the bank have life insurance on you? Because you have accounts with them, but you don't have life insurance on yourself. If you look it up, the banks have the most life insurance.
Yep.
And a lot of people don't realize that. And I tell people, look at history, look back at the Great Depression. Life insurance companies was the only companies that was doing good during the Great Depression.
Mm-hmm.
A lot of people don't know about Walt Disney's story, about how people did not believe it. The theme park, a lot of people didn't believe in that, so he took money out of his life insurance policy. McDonald's, he was taking money. I went back and read, he was taking money out of his life insurance policy to play himself and his employees. J.C. Penney was another one. So a lot of people don't, because a lot of us were not taught about it growing up, and a lot of people just don't realize, like, okay, a lot of these companies, a lot of people don't know that they can get life insurance on their business. A lot of these banks and business, they have life insurance, and that's what they use when times get hard.
Yeah, and not only that, like, when I found out, and a lot of people don't do this, but they don't think about it, a lot of the credit cards have insurance on it, that if something happens to you, you lose your job. Instead of you defaulting on the card, a lot of people have elected to have that option, and when something happens, they don't call and utilize it. Like, the reason that we have these things in place is so that when you need a hand up, you need support, you're going to get it in real time with a company that cares about you. And the customer service is great. Like, how he works with the team is great. And I just wanted you guys to have accessibility to someone who I know is not just going to play, but is going to truly, truly deliver.
I have one more thing for you.
Take your time. Don't hurry now.
No, I gotta. I'm an MC for a meeting tonight, so I gotta go to the next.
Okay.
I gotta speak again. I got another speaking event. So a lot of people don't realize, and a lot of insurance agents don't tell individuals, because normally when we don't have the most money and we want to like get our customized to our budget, a lot of insurance agents say, hey, you can add, okay, you don't have to get a policy on your kids, just add them as a rider. So it's always tough. It's best for your kids to have their own policy, because you can get a kid a policy with like $25 a month, especially if they're young. $100,000 policy with like 25 IUL for like $25 a month. But what a lot of insurance agents do not tell these individuals, if you have a life insurance policy and you have the children rider, if something happens, if you have 3 kids and one of your kids pass away, once that rider is
It's gone.
used,
When you
it's
told me that,
gone.
I was shocked.
So so the other 2 kids are now not covered. The rider is not reusable. It's only covered for one kid.
Wow, I was completely shocked when you told me that. I was like, no, it's supposed to help. And you were like, nope, it's
And
a one and done.
yep,
It's a
and
one
a
and
lot of
done.
people thinking like, oh, if I get this rider, all of my kids are covered. But no, all of your kids are not covered. It's just if something happened to one of your kids, that one child is only covered.
Wow. You know what? Like I said, I appreciate it. Y'all got any questions? Because listen, I know him in real life, y'all. So I'll be talking to him.
Yeah, any questions, please ask.
Now, before you go, if you guys have questions, let me know. Any questions? If not, if you do, drop it in the chat if you can't come off of mute, because I totally understand. But while we're waiting for the questions, if there's any, and I'm trying to check, please go ahead and wait a minute. We have a comment in the chat that says, I am so thankful for your knowledge. Oh, thank you, Laforenzo, for coming and see. I told you.
Thank you. Thank you.
That's from Nika. And then we have from L. Motley. Term with living benefits was introduced to our family in 2020, and this information changed the game for us. She is one of the people that I know that she has she has been the one who taught me hard money lending, and one of the tools she talked about was that living benefits and being able to pull and leverage that to actually get the money that she needed to literally help her family. So when I say there's people in the room that knows about it, like that's amazing. How do I get $1 million? Help me. If she don't stop playing, see, this is what I'm talking about. This is why you let everybody in your room. But no, you get $1 million, you can come up with a plan. It all depends on what the strategy is. I did have a coach that broke down how you can make $1 million. You just really have to have a plan. And if you have a talent that you can quantify with a dollar amount and you have the right person that's going to find value in what you have, you can have $1 million product. I promise you, y'all can make this happen.
Yes, and
if
you have old 401ks, make sure you guys roll your old 401ks over. Don't leave them with
that is something that I be missing a lot. And they send me a message.
I help with those as well.
You heard that? He said he helps with rolling over 401k. So I'm just telling you, his information is in the chat. Y'all can see him. How can anyone find you? Drop your handles. I know we have your website. How can we get in contact with you?
TikTok. Let me see what my TikTok.
You want me to grab the Facebook link? Because I'm already on your Facebook.
Yeah,
grab your Facebook link? Okay. So let me drop the Facebook link here for you guys to follow. Watch the content that he has. Like he drops so much knowledge that I don't want you guys to miss it.
Yes, I think my Facebook is Laforenzo S. Wilkins.
Yeah, I already got it. It's already on there.
Okay.
I already got your Facebook.
My TikTok is my first Laforenzo Wilkins, Instagram Laforenzo Wilkins. Yes, if you guys have one, if you want to do thinking you want to get life insurance, you want to do a consultation, we can do a free consultation and talk about your goals, talk about if you don't feel comfortable asking questions right now, feel free to reach out to me. We can set the goal. My goal is just to serve the community and help individuals get the coverage they need and reach their goals that they want to reach.
Love that. I just want to say thank you so much for your yes. Thank you for pouring into my group and giving them life. Thank you for your knowledge. I'm not playing, guys. If you guys have questions about insurance, want to find out how it's going to work for you, do not sleep on the opportunity of someone who is doing it and who's really changing the lives I'm just going to say, for us African American families. Like he's touching the small communities, he's going into small businesses, and he is making massive impact. So take the opportunity, reach out. I dropped all his contacts in the chat, and I will make sure that I double back and put your Instagram because that's the only thing that's missing.
Thank you.
I put your
and
Facebook.
I'm actually having my first free live in-person women empowerment event next month, the end of September. And here
Oh
in
wait, I
Dallas.
think I can. Is that on your link in your Facebook group or on your
I'm sharing it. I'm gonna post it this week. I'm gonna post the event this week. It's a free women empowerment event. It's gonna be about mindset, creating our mindset as we get ready to go into the fourth quarter in 2025, creating a positive mindset, talking about credit, talking about budgeting, talking about life insurance, talking about retirement, just a networking for other individuals. Because a lot of people, it's gonna be a women empowerment event. A lot of people, they don't have a circle. So it's good to get out and network because, hey, as the saying goes, strangers will make you rich. So it's good to get out and meet other like-minded individuals because a lot of people, they only hang around with their families and they feel like their families are not elevating them or they're not getting the knowledge that they need from their families. Even their circle, they feel like they're not getting the knowledge that they need from their circle. So it's good to get out and networking and everything. But I'm gonna start promoting the event next week. I
And
already got
when's the event happening again?
September the 28th.
September the 28th. All right. And as you guys know, I love it. Y'all know as soon as I get the flyer, it's going to be in the Facebook groups. It's going to be on my Instagram because I want you guys to be in a place that's going to be able to hold you accountable and it's going to help you 10x and reach your goals. So you have to be in the right place. Remember, your net worth is connected to your network. So you need to network with the right people to get to where you want to be. So Nika, who says she wanted to be at $1 million, are you in the room with people that are making six figures? Are you in the room with people who are moving and shaking and doing those things? If you're not, find out where those people are. Let's get to them because I promise you, if you stay in a room with someone that's a high earner, they're going to challenge you to level up. Right? If you're with people that are making the same amount that you're making or doing the same thing that you're doing, you're not going to be able to get to the next step. So you always want to make sure that you're moving in circles of where you want to be, even if it's an uncomfortable situation. That's just my little soapbox. Carla McEwen said, she logged in late, but she wanted to say that she loves what she hears. It is so informational and she would love to get more information. So I did drop your link in the chat. Any last words before we let you go? Because I know you said you had another meeting. I'm sorry.
Okay. Man, any last words. The last 4 years pandemic have turned a lot of our lives upside down. Like we lost some family members, we lost some friends. 2024 has exposed a lot of people that you close to you, you thought was your friend. I just want to tell people and show people around the world it's okay to be your unique self. Just be yourself. If you have a dream, go out of it. And being a business owner, it's not always going to be peaches and cream. You see so many people saying, oh, start a business and quit your job. Use your job to
Solidify your business.
invest into your business. And then as you grow, then you decide to leave your job. But just be yourself, pray about it, have faith, just continue to go. Every day is not going to be easy. And just start planning for 2025 and just get around people that elevate you. Get around people that want to see you, not people that talk about you when you leave the room or people talk about you behind your back. Find your tribe, find your people, find your purpose in life, find your mission in life, find your gift in life, and get out here and serve the community because the people that the Eric Thomas served, they can't reach everybody. The people that Tony Robinson reached, they can't reach people. So I know sometimes we get scared or nervous or we get scared to get on video, we get scared to walk in our fear, but if you have a gift inside of you, if you have a purpose that you're supposed to be doing in life, it's gonna tug at you until you start doing it. So take the last 5 months to really work on your craft as we get ready to go into 2025. As we see the economy is not the best right now, make the best of your situation, prepare for your situation, start planning for retirement. Do not wait to the end, start planning for retirement. Go after your dreams and create the life that you and your family desire and deserve.
I love that. Yeah. Thank you so much for coming into the team. Wealth Insight, you guys can stay on the line. We're going to say bye to Laforenzo so he can get to his other meeting. But I'm going to leave the room open. So if you guys have questions, concerns that have to do with your business, we'll tackle because I see one in the chat. But I want to say for those of you guys that are watching the replay that came into the live, I thank you so much. And as always, thanks for being a beast.